Hello, friends. Welcome to Nirmal. I'm Piyush Jain, and today we are going to do a corporate conversation. A company which has been growing by leaps and bounds, strong growth in revenue, strong growth in order book, order inflows, strong growth in profits. And when you talk about the stock has really delivered, has created wealth for the shareholders over the last couple of quarters. I'm talking about none other than Jupiter Wagon Limited. And to know more about what's happening and what is driving really from the perspective of strategy and also on what actually the company is really planning with this new acquisition that is Stone India Limited, that is actually going to be an important part of our conversation today. It is also going to add another strategy element from the perspective of return on equity also, and then also what perhaps next year is going to look like for the company. So without further ado, let me welcome the management here, the MD of the company, Mr. Vivek Lohia. Vivek ji, welcome to the show.
Yeah, good afternoon, Piyush. Nice to speak to you again.
So Vivek ji, we'll talk about Jupiter Wagons as always, but I won't wait. I will straight away start talking about Stone India. That is something which is, I would say, a new, interesting development for the company. Yes, operationally, it must be months in the making for your financial team, operational team. But from our viewers, from our investors' point of view, we would like to know that how company is really planning to scale it up, how much time it is going to take for you to really resurrect the company and then actually start getting the revenue out of the company. So help us understand the vision behind it, how it is gelling in your strategy, what's the sort of money you have to put into the company.
Yeah. So as we have discussed earlier, also, so the brake business has been one of our primary focus businesses. So both in terms of a backward integration as well as forward backward, because again, when you look at a freight wagon brake, the brake system on a freight wagon plays a very crucial role, and till now it is pure bought out for us and most of our peers. Forward in the sense, because again in brake we are now successfully giving the brake systems for the LHB coaches, both the brake systems as well as the brake discs. We are also exporting it to the European market, and going forward we will be ready for the brake systems for the Vande Bharat also. So in that perspective, it is both a forward as well as a backward integration. It's a business which gives much higher margins, but and even and competition wise also, globally it's got a very few players are there in this business. So it is a that way. Uh, for new entrants to enter this business, it is not that
The
simple.
barrier is high.
So the entry barriers are very high in this business because it requires a lot of certification, which takes a considerable number of time. And India is mainly based on the UIC certification, so that itself is a challenge. So Stone India was a very dominant player in the braking business till till such time as it got shut down. And it has, especially if you look at the freight part of the business, it has all the critical licenses which were required for us to be a truly entrenched player on the freight brake market, which for us was very important, because for us it's a captive business. So from after acquiring Store India, that is the main benefit we get out of that of this acquisition. Besides, again, Stone had a big presence in the locomotive market. It made brakes for locomotives. It made a lot of valves for the locomotives which are currently in operation. It has the license for the air dryer. So these are again good products to have. Again, Stone makes pantographs, both the standard as well as the high reach pantograph, which railway is currently using. It's got the light, and with now 100% electrification, pantograph again is a very crucial product. So we have a diverse range of products in Stone India. So the idea is that in the next 6 months to a year, to again restart. The licenses are all in place, but we have to obviously restart the infrastructure and get it recertified and start producing this. So that's the whole idea. In the next 6 to
Just
12 months, to do the same.
Vivek, I'm just taking the liberty of interrupting. From the perspective of licenses, do the licenses have sort of any near-term sort of expiry, or these are long-term licenses? And I would assume, obviously, the licenses can be renewed. But just as an information, any near-term expiry?
No, none of the licenses expire. These
Okay.
are licenses which don't have any expiry period as such. It's only that you have to get them revalidated. So it's only about whatever infrastructure is needed just to get the infrastructure revalidated.
Sure, sure. Over to you. You were completing something before I interrupted.
Yes, so that is the whole perspective, and it fits well into the overall brake business, which I've told on number of platforms that in the next 3 to 4 years for us, it will definitely be about close to 1,000 crore business, and with sizable margins we expect out of the business, which will help both in that business itself and overall in improving the company's EBITDA margins.
Absolutely. And from the perspective of the factories and the equipments, do you have to largely sort of invest into getting them into operating condition, or there is some more investment where actually you need to get machines also? Like, how's the condition right now?
So, in terms of the physical infrastructure, it has got a very it's all in place, and the I would say that it's got a very sizable infrastructure today. If you look at the covered space, it's more than 2 lakh square feet of covered space which is available. So, which again, we needed to even expand the existing, the brake business. For that also, we needed additional infrastructure. So that it has a sizable infrastructure, and it's in the heart of. So the plant is in Calcutta, and it's in the heart of the city. So that gives us access to quite a good footprint of infrastructure. In terms of the equipment, yes, definitely we will be needing to make investments, and which I've also mentioned in earlier calls that we expect to around close to about 25 odd crores, 25, 30 odd crores of investments will be needed to, I think, but over a period of time will be needed to, completely restart the facility.
But when you say 25 CR over a period of time, is it like some 3 years? Because then the annual cash outflow goes to 8 CR. Like, what's the time period you are talking about?
No, so we are not. So we want to fully operationalize this plant in the next 1 year. So idea is
So
that whatever investment
that's
will
like
happen.
a quarterly investment will go on, but over the year, total capex is going to be 25 CR.
Yes, over the next 1 year. So maybe it spills over into the next financial year, but over the next 1 year, and idea is to put in whatever the capex is needed and to restart the facilities.
Right. And what is sort of asset turnover you expect from your investment and the overall? And also, let me remind our viewers, and let me ask you this question for our viewers: is that what is the sort of total investment you're making for, or you have made for purchasing this company?
About close to 25 crores is what we have invested to acquire this.
And then another incremental 25 CR as a capex?
Yes, that is what we are.
So let's round the figure to around 50 CR from the perspective of making it a revenue generating asset. What's the sort of asset turnover you would be expecting?
Again, it's too early, but when the company shut down about 7-8 years back, it was doing a business of about 120 odd crores. So, so there is definitely in terms of the revenues, there is and this is, I'm talking about 6 years back. After that, the size of the railway market itself is more than quadrupled.
Increase multifold, yeah.
Yes. So, there is a sizable opportunity, but again, it's too early for us to comment on that.
Yeah, and I'm just making my own guess, not your guess, but I'm just making my guess that perhaps with a good, strong company, a strong footprint, if 120 CR was the last time turnover, I think then perhaps 3 times would be a sort of average satisfactory turnover.
Again, it's
Too early to call, I know.
too early
But,
to
but,
call.
but
Yes, but
by your own benchmark.
we have very strong expectations from the company, and definitely we expect a lot out of it. So, as you can understand, for us on the freight side itself, the brake business is a captive business. So, even if we make close to about 7,000 8,000 freight cars on an average in a freight car, I think currently it's about 2.5 lakhs is the cost of a brake system. So, it's a 200 crore odd is the captive business for us, which is for our own requirement itself. Plus, then it's about delivering it to the market. Then it's the replacement business which is there. Then railway has its own requirements. So just to give you a perspective on this.
And this is like almost annual captive business of 200 CR?
Yeah, we make our expectation is that right now we are to make anything between 6 to 8,000 freight cars annually. So
Right.
so it's the maths works out of that.
Absolutely. I'll continue to do my maths. Vivekji, braking system has one of the highest margins in your entire portfolio. What sort of margins you're expecting out of the commercial freight braking? I don't want a ballpark, but a very wide range. Is it like between 20 and 30%?
Again, no, see, commercial freight on the freight side, the braking margins are not as because again the technology curve is much lower compared to on the passenger side of the business, so the margins are lesser. But again, it's too early for me to comment. First let us restart the
Research it.
business. Yeah, then we will get to know on the margin side. But definitely, it is lesser than the on what you get on the passenger side of the business. But again, more than the margins, it's about our vision, about Jupiter's vision, about that being fully integrated. I think it's a very important part of that overall strategy. So it is not only the margins are, yeah, definitely there will be margins, but the end of the day, we want to build a business which is sustainable for many number of years, and which can keep on delivering good value to so that is the whole perspective behind the strategy which we are adopting.
Sure. And from the perspective of now, I'm slowly moving towards back to your core business, and of course, Stone India is a new part which is getting added to the core business. But from the last time we interacted, we're talking about the huge order opportunity. We're talking about your wagon manufacturing capacity. How the sort of plans are progressing? Like how the sort of wagon manufacturing plan is looking to you right now?
So it is on track. Currently, we are doing about close to 600 wagons a month. And our target is that over the next 2 years to take it up to 1,000 wagons. So that is what we are building our infrastructure, and that is how we are moving forward. In terms of order book, again, on the private side, again, the current order outlooks are very strong. Every quarter, we keep on building on additional order books. And on railway side, as you may be aware, also, over the next 1 or 2 quarters, we are expecting quite a sizable or tenders from the railway side. Our expectation is that railway would come out with tenders anything between 40 to 60,000 wagons odd of tender will come. So that itself is a sizable, and that is in line with their which they had already projected that in the next 3 years they'll be buying about close to 150,000 wagons.
Yes, and we talked about this last time from the perspective of what a sort of boost it would be to the sector and perhaps the overall business for the entire industry. Nevertheless, Jupiter Wagons itself is in a strong position. But continuing on the same, and I'm just thinking along, like we coming from research, like go back to numbers very soon. So let's take a bit with the humor here. But I'm just adding here. The orders actually are coming thick and fast. We are looking Stone India as a new sort of part coming to the puzzle here. And whenever there is a low cost acquisition and then you're able to generate turnover, it usually adds to the return on equity. That's a sort of natural conclusion. How's the sort of trajectory looking to you on a return on equity? What's the sort of overall capital intensity or capex plans looking like over the next 12 to 24 months?
So, as the capex plan is, so most of the capex which we are going to be putting up is, it will be through our internal accruals only, since we have very strong cash flows, and including our brake business as well as the core business where we are putting up new capacity. I think over the next 2 to 3 years, we are looking at about 250, 300 odd crores of additional capex.
Okay.
So, and given the revenues which are going to flow from there, I think it's something which is very reasonable, and so I don't see a challenge on the capex side, and it's not that also that we are going for any substantial leverage. It's all going to be mainly through the internal accruals itself.
Right, and you already raised a good 100 crore plus amount, almost 125
Yes.
CR in the recent times. But then also, I wanted to ask you about the sort of the closing March quarter performance. We're in July, so now it's a distant time, but you just announced 1.5 months back. I wanted to sort of ask you in terms of FY23 closing. We saw a very strong revenue growth, but we saw a bit of dip in the net profit. So help us understand how the sort of sequencing in terms of order execution, because many times companies in the engineering space, they also actually have a phased order execution, and that actually could make the quarterly comparisons really not that worthwhile. So how the sort of it's looking like, the trajectory is looking like in terms of margins, uh, and how's the March quarter?
So I think going forward also, in terms of the revenues is going to be consistent, and we are, as I've told you, we are increasing our capacities, so that will start also reflecting in terms of the revenue numbers. In terms of margins, again, as in this industry, generally you can't have super margins also. It's This is the industry where margins stay between about 10 to 13 odd percent is where typically we operate in. So I think, yeah, we will continue to operate in that band. We again expect that compared to our peers, we will be on the upper side of the margin curve only. So, and as the brake business keeps on doing well, and maybe in future we add other businesses, that will definitely have a positive impact on the margins. So, yeah. So I think
Yes,
that is.
I would say I think it was around 39 CR, and when you go last year around 13 CR, the company has already traveled a lot from the perspective of net profit, and you just can't basically escape away from the fact to really imagine maybe 12 to 18 months down the line, when Stone India starts delivering, perhaps I think it's the sort of accretion to profit and margins perhaps is going to be remarkable here.
Yeah,
Um,
and that's not only Stone India. My other the JVs which I have, they are also now, all the licenses are in place. So we have gone through the difficult part of getting the products homologized in the Indian market, getting the
let's
licenses.
revise them again. Help us understand the sort of top two, three launches or the sort of moments in JVs which you are expecting now.
So on the JV with the JWL Daco JV, there, for the LHB coaches now, we have got the licenses to supply the brake systems.
Mm-hmm.
So I think this week or next week there's a tender for 2,000 plus brake systems from one of the coach factories, and we expect similar numbers to come in the next 1 or 2 months from the other coach factories. So there we are again looking at by next year we are looking at an order book of anything close to anything between 500 to 1,000 brake systems, which we'll be executing. And each brake system is roughly about 20 odd lakh rupees. So that's a sizable execution for us. Again, on the brake disc, as I've already mentioned earlier, we have a very strong order book, and we are now building further order books, and our export is also going to be starting very shortly there. So we have started some exports, which are going to pick up further momentum. So again, so both these businesses have now started generating revenues, and next year we expect at least about 300 odd crore revenues to come from both the businesses, which I'm talking about FY 24, 25. This FY by FY 25, I'm expecting that they should start generating these kind of revenues, and which will keep on going up. That combined with Stone India and the rest, as and at the beginning of this call, I mentioned that in the next 5 years we are looking at this vertical overall to give us revenues of 1,000 crores plus.
I was already calculating as you was saying. I don't think so. Actually, the numbers are going to wait for 5 years. Perhaps I think the calculations are telling that they might be coming sooner. I might be wrong, but I think
Yeah, the
that's what
sooner
is
the
appearing.
better, but that is how we are always very conservative when we look at our numbers. But
Absolutely.
so
Yeah.
next 5 years we are looking that kind of, and this business typically have margins above 15-20 odd percent. It uh, so it should be again it strategically also it helps us, and it should be very positive for the company.
What's the sort of expectation at 1,000 crore revenue for this braking system division? What sort of percentage of the revenue at that time you are expecting it to command, like of the total business?
Again, it's a very difficult, but it will
No,
be.
no, no.
It'll play
I'm
a
not saying a
crucial.
ballpark percentage, but I'm just saying, like, are you expecting it to be like almost half of the total business, or
No, no,
like?
not less than half of the total business, because we expect the other businesses to do also to grow considerably, but it'll become a substantial part of the overall business. That's what I can.
Yeah, I'll tell you the reason why I asked. I think our viewers will actually love to hear that, because at the numbers which you talked about, in about 4 years, 5 years, whenever it happens, at those numbers, we are actually talking about this division to start generating profit almost equal to what the entire company is generating profit right now. So which will almost imply that company would have actually really sort of grown a division substantially. That perhaps is something which is interesting for our viewers to really track for. But we go to, as we move towards the close of this conversation, perhaps let me ask you now. June quarter has gone by, so the first quarter has gone by. We have entered the second quarter, and how's the business climate looking to you? How's the sort of order pipeline looking to you, both in the international markets and Indian markets?
So the order pipelines are very strong, and we don't see any kind of letdowns. On the contrary, we see that it's going to get stronger only. We see a lot of tailwind, which is there. A lot of people are, especially if you look at the core sector, the government is investing heavily there, as well as for the first time, you are seeing a lot of private capex which has started happening. I think you'll have a much better perspective. If you look at the steel sector, the port industry, the cement industry, they are committed to a substantial amount of capex.
And that is
So
after a long time.
that
Yes.
is after a long time. So that itself has its own set of tailwinds which will come out of it. So till now, mainly the driver has been the government, but I think once the private sector starts putting in money, then you see a big momentum and acceleration which comes in. So I think we all expect to get our share of bounty from, I would to put it crudely, from the whole growth story?
Well, I think all our viewers, will be watching out for that development to happen, and perhaps keep watching from the perspective of how the entire sector and your company is doing. It has been a remarkable, and I would say a fabulous journey so far over the last 12 months, and perhaps the journey is going to be as interesting as it has been over the last 12 months, because you are adding a lot of new parts, a lot of new launches, new developments on your side. So from our side, we will keep expecting to keep interacting with you on a continuous basis. But for now, all the wishes to you, Vivekji.
Thank you. Thank you. It's been a pleasure.
And with that, dear viewers, this is the end of this conversation. Hope you enjoyed it.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from Nirmal Bang.